Hey, good morning. Let's talk about interest rates, Janet Yellen, failure of the banks, the Treasury and the Fed. So Janet Yellen said yesterday, she's the US Treasury Secretary, okay? The same woman who said back in the beginning of January 2022, when inflation began to rise, that's only transient, it's a blip, and by April 2022, it'll be over. That's the Janet Yellen we're talking about. You have to be absolutely clear what we're saying here. So Janet Yellen came out yesterday and said nothing to worry about, because what will happen is that the Fed or the regulator or the Treasury, whichever authority is, will give a backstop, will give support to all those secondary banks regarding depositors' money, regarding client accounts. Okay, to give those depositors the absolute security that everything's fine, nothing to worry about. In other words, the banking system has failed again. Okay, well, why has it failed again? And a lot of people are saying, get a lot of pushback on this and get a lot of comments. A lot of people saying, why has it failed? It's not failed, it's just that the government is giving support. Well, by the government giving support to the banking sector, which will have to be absolutely clear, means it's a business that can never ever fail because it's got government support. In other words, if you want a business that's guaranteed to make money, guaranteed to whatever losses you make on behalf of the clients or the business, you get refunded, reimbursed by the government, then that is a business of a bank. And the banks have failed, because when the governments have to step in and guarantee the deposits or the support the depositors or lay out money or whatever structure or print money, whatever has to be done, like in 2008, that is a failure, and it's a continuing failure since before 2008. But 2008 came the big blow up, obviously with Lehman's, Bear Stearns and AIG and Goldman Sachs and JP Morgan and Morgan Stanley and Chase, where all the banks went bust. Okay, effectively what Janet Yellen is trying to say is that we want to avoid the banks going bust because we don't want another debacle that was in 2008. But that debacle is already happening. The cracks are already there, and what's going to happen eventually, in my opinion, of course, and it's only my opinion, is that you're going to have the banks or the central banks again printing money one more time, okay, or another time and another time, all depends. Now you've got interest rates coming out in the US, and they're probably likely to increase by 25 basis points, but that is going to be it. They're not going to be increasing interest rates, or very unlikely to be increasing interest rates in the future due to the banking crisis, because the rise in interest rates quite simply has caused a liquidity crisis. And when you have a liquidity crisis, then that impacts on the bank's asset management and also their investments, one thing or another. They've made pretty poor decisions. They've made pretty poor mistakes. And therefore, as a result of that, nothing to worry about. The central banks will bail them out. Okay? This is crazy. But there doesn't seem to be any alternative, because if the central banks or Janet Yellen and her co-conspirators did not bail out the banks, then the whole banking system would collapse. And that's what's caused, effectively, Bitcoin to rise. Bitcoin has risen on the back of speculation of building an alternative banking payment system that really has failed, and hoping the Bitcoin investors and the traders and the bulls, hoping that Bitcoin will go up to $1 million a coin. Could well do, because there's only 21 or 22 million coins maximum in circulation. And if it does take off as an alternative banking payment system, then yes, it is going to rise. To what levels? Who knows? I don't know. It might go to 100,000, 200,000, 50,000. You just don't know. It's very binary. It's very up or down. It's a yes or no. It's black or white. That is Bitcoin, and that is cryptocurrency. But going back to what the Fed's doing and the US Treasury, and today you have the FOMC meeting coming out this evening, then again, they're probably going to raise rates by 25 basis points. Any future rate rises are going to be, I think, non-existent as far as I can see. And they're taking into account this banking crisis. The banking crisis has only just started. It's not going to end here. Even though stock markets went up, even though there's a relief rally, this is probably more of a bear rally than a bull rally, and you're probably going to get a sell-off as more and more facts and more banks declare that they have issues and they have problems. This is Mayor Walensky with Driving Markets. You can share, subscribe, comment. Catch you later.